Todd, you hear all this, digest it. Do you think this is a stock you want to pick up or bail on?
Kelly, it's actually going to be neither. We hold kind of a token piece, about 1% allocation in our growth portfolio. It's kind of on my watch list to cut. We've lost any kind of semblance of uptrend support that goes all the way back to IPO days. Basically, if we break through 185, Kelly, that's going to be a technical level. I'm going to cut it. I'm not giving up on the story. I still think there's a strong fundamental position in the company, a lot of cash in the balance sheet, good growth metrics, but they have a long way to go until they can prove to us that they deserve to be back in a growth portfolio. It's acting more like a sort of a boring value stock trading, 15 times forward earnings.
Have you been in the stock in any kind of substantial way over the past couple of years? And if so, what was your average price, your average cost?
Oh, well, interesting. Yes, absolutely, Tyler. I have owned the stock. I've owned the stock for 5 years. I'd have to look back. We just recently launched our wealth management RIA just 6 months ago, and we launched with about a 2% position in there. This was October. We've since cut it down to 1%. So again, on watch below 185. The company, as he said, it's incredibly, it's got a strong balance sheet. Their margins are extremely strong. They're continuing to grow revenue. Their margins are about 80% compared to the industry at about 57%. They've got a 5-year earnings growth of 30%, free cash flow at 60%, increasing the cash in the balance sheet. But it's just unfortunately this stock and even communications in general, guys, I think you really have to look at in terms of holding your position. XLC is way underperforming the rest, and that's with Google in that ETF.